Enphase stock is down following their second quarter earnings results, but this isn't the first pain shareholders have felt, as the stock is down more than 40% year to date. I did a previous video on Enphase, I believe February of last year, talking about their business model, as well as warning shareholders that it could be a bumpy ride, that I personally wanted to put my capital in things that I had greater conviction in. So if you want to have more of an understanding of what exactly they're selling, the value of their micro inverters with solar panels, check out that prior video, because in this video, I really want to cover a couple of things. One is covering their latest earnings. Two, why the stock is down. Three, my thoughts on where the stock can go from here, as well as how I'm personally, and this is a little bit of a personal investment update, how I'm personally using artificial intelligence to help me quickly get up to speed on investment decisions. Now, keep in mind, I previously last looked at Enphase when I made that video. So this is going to show you how you can leverage these artificial intelligence tools too, to now get up to speed and get smarter in terms of researching investments, saving you a lot of time. So let me go, share my process of how I'm looking at the financials, how I would get up to speed on Enphase since my last video. So looking at their financials, this is through AI Ticker Chat. Once again, first month is free. You look at it and these financials actually look fantastic. I mean, this shows their second quarter results. This shows their second quarter results for a year-to-date perspective. You can see strong revenue growth year over year. You can see strong profit growth. I mean, it went from 94 million in profit last year to 170, so nearly doubling. You can see their diluted earnings per share is more than doubled from 54 cents to $1.09, so not a tremendous amount of dilution. I mean, you see total diluted shares going from 144 million shares to 145. So overall, the picture that I see here, I broadly like. I mean, these are attractive financials. Now I'm going to want to understand, okay, let's understand what's actually going on. It's been a while since I reviewed this. So I'm going to click on the net revenue line using the AI Audit feature to understand what it's about. And so the AI Audit feature will pull this up, explain what's actually driving their business. So they say, look, it's all about their revenue growth is driven by micro inverter units. Once again, my prior video talked about the value of using the more expensive micro inverter units for solar panels. The company sold around 10 million microinverter units versus 6.2 million in the prior period. So this is during the 6 months year to date, a 62% increase in volumes shipped. They also talk about higher average selling prices. These are the things I like to see. So in just a few seconds, I'm quickly getting up to speed on what's driven the recent financial results to say, okay, there's a lot of very favorable data points that's driving their revenue. That 40% plus revenue growth. So now I want to understand. So I'm going to chat with the documents to understand, why is the stock lower on this? And so I'm selecting their earnings call. Why is Enphase lower on these results? And I'm getting a response saying, well, there's a couple of reasons why. The company reported a decrease in revenue compared to the previous quarter. The company provided guidance for the third quarter that was lower than expected. And the lower guidance may be due to correction in the US solar market, as well as seasonality in Europe, and that they're managing their channel inventory. So there's a lot of data points here. I'm going to want to confirm them myself to make sure that this is accurate. And so first of all, I look at their actual, pulling up the press release. I see that, yes, there indeed was a sequential drop. So this might be part of the reason why investors are a little skittish here, seeing it goes from 726 million in the first quarter to 711 million. Okay, so the business is sort of slowing down. Then this guidance, and this is the key, I think the main reason why the stock is, in pain territory for shareholders, is because their outlook for the period ahead is for 550 million to 600 million in revenue for the third quarter. This is versus third quarter revenue last year of 635 million. So they're clearly going from the growth that I was just talking about to a potential decline in sales. And so that is a concern. We're going to want to understand why in just a second. If you dive into their margins, it also appears that their margins would be taking a hit in this scenario as well. So looking at what management has to say, so now I want to read the actual text. They talk about the context for their guidance for the third quarter. They talk about microinverter sell-through in the US peaked in the fourth quarter of 2022, because of a high interest rate environment in the US. And this is one of the key aspects that I called out previously, which is that when you have a one-time sale business model, which is largely what they do, they're when a consumer is effectively buying a product once, you have your house and you're getting it in your house, and you're not buying new houses every year, hopefully. Unless you're a baller like that. Personally, that's not my journey. But if you are, I'd love to hear it. Maybe you're flipping homes. But if you're making that one-time purchase of a home, and that one-time purchase of saying, hey, I want to get solar, that decision is going to be impacted by higher interest rates or lower interest rates. And so management's calling out, yeah, higher interest rates have impacted our results. And really, the market peaked a couple of quarters ago. And we were expecting favorable seasonality for the summer months in the second quarter of 2023. That didn't materialize. So the broader economic environment, because of higher interest rates, is overriding the seasonality. And so they saw an increased amount of inventory with their sellers. They're effectively their channel, their sales channel. And now they're saying, well, we don't want a huge inventory buildup. So we're taking aggressive and prudent actions in the US to manage down the channel inventory, effectively to work through that inventory build, because we were expecting a more favorable second quarter. And so that means probably price cuts in the future. Now, is this due to competition? Well, they're saying, no. This isn't competitive dynamics. We think our market share is very stable. We still have a high market share for microinverters based on both internal and third-party data. It's not competition. Now, if I were a shareholder in, Enphase, I would want to understand, how are my competitors doing and what are their growth rates? Because if they're saying the same thing, high interest rates, potentially declining in the third quarter, then I'd say, okay, this checks out. So that's additional due diligence. If you're an investor in Enphase, I'm not. So this is just, I'm sharing the analysis I would do, walking you through, getting quickly up to speed. And I quickly see that 66% of their revenue is tied to US sales. So this is a big part of their business. Yes, Europe is doing, very well and picking up. But where does Enphase go from here, based on these data points? First of all, in full disclosure, this is not financial advice. I also want to do a quick plug where I recently bought more of a stock that I think is over 300% upside potential that I called out to my subscribers at unrivaledinvesting.com. So if you're looking to take charge of your investment journey with compelling ideas, market insights, and an exclusive Discord community available for annual subscribers, come check it out. I also have educational videos and materials, separate courses on how to read financial statements, as well as how to value businesses and like Enphase. So looking at Enphase, once again, that's all at unrivaledinvesting.com. But going back to Enphase, there's a lot that I actually like about them, about what they've done with, management, their products. When I see a business that says, yeah, this is our path. This is where we've been. Where previously we were just selling microinverters. The amount of revenue that we could generate per home was only $2,000. And now the revenue that we can generate per home is closer to $12,000 because we're introducing all these new innovative products, software solutions, battery solutions. They're even talking about a charger for your electric vehicle. So I like looking at businesses that are innovative and constantly rolling out new and valuable products. So this is what I like to see. I also think there are some macro tailwinds that are favorable for this company. Management gives some context once again from their most recent call, talking about, look, the US solar market, after 3 years of phenomenal growth, it's going through a correction. Okay, so this makes sense. The residential solar market doubled and Enphase sales tripled. So they're highly leveraged to the residential solar market. Higher interest rates is going to make it tougher, if for people to roll out solar. Residential solar, however, has only achieved 4 to 5% penetration in the US. So this would suggest that there's a lot more potential in the years ahead. And this is my chief question. And, if you have a perspective on it, I'd love to hear it. But just because you have 4 to 5% penetration, 4 to 5, not 45% penetration, and that does suggest that there's a lot more growth ahead, does that mean the actual baseline for the business accelerates? So let's say you're doing, 600 million, 700 million in revenue per quarter based on the microinverters and batteries that you're selling. Does that mean, that you stay at 700 million per quarter in revenue and slowly but surely that penetration goes up to 10%? Or does that mean you can actually, increase your growth rate, from a decline that's expected next quarter to, a couple percent. And that's really where you're going to need to see, growth to drive your return over time. And if the business, is effectively doing, let's say 700 million in sales going forward, and that's how the market expands, and that would be great, then the challenge is that's not a lot of growth for the business. And so that's the key question you want to be asking yourself is, sure, the residential market, the residential solar market may have only achieved 4 to 5% penetration in the US, but what does the growth rate need to look like for that to actually accelerate dramatically? And I don't have a smart or clever answer on that. So I definitely welcome feedback on that. I'm sharing my thoughts on, getting up to speed on this. They do talk about favorable long-term drivers like tax credits, rising utility rates of the prices that people pay that will incentivize them to get solar, increasing grid instability. I mean, right now, I think there was a warning on the East Coast to see a sizable grid outage, climate change, increasing EV adoption. These are all favorable things that should help encourage residential solar adoption. They also talk about their new products that they're going to be launching, best-in-class home energy systems like their batteries or EV charging solutions. And they're also talking about international expansion in Europe, as well as emerging markets, as well as offering small commercial solar solutions. So there's a lot of different ways to win, and I look at their financials, and broadly, I like to look at a business that is generating more free cash flow than their net income. That is a huge positive. Has a net cash balance sheet. That's a huge positive. These are things that I like. But the big turnoff for me is the idea that this is not a recurring revenue business in the sense that you have this consumer that only needs to make that one-time purchase for their home. And that's the part that makes this trickier to size up of what's your growth rate in the future. And I think clearly with the volatility in the stock, a lot of investors just don't know. And so in order for Enphase to work out, and this is a hypothetical valuation framework, stock price can go way higher, way lower. In order to get what I'd argue is an attractive return based on the current valuation of over $20 billion market cap, I think you would need to see between a 20 and 25% growth rate, at least in the years ahead, in order to drive a reasonable return for the stock, because, it's so hard to get an understanding of, well, why won't it grow at 15%, especially when this next quarter it's going to be shrinking. And that level of uncertainty makes it too difficult for me. And this is, look, every investor needs to figure out their own path. For a company like this, for me to personally get involved, I would consider looking at it on a free cash flow yield basis. So saying last year they did around 700 million in free cash flow. At what point can I say I'm confident that they will do that as a base of business going forward, give no credit to future growth, and say, at what level of free cash flow is that a reasonable yield? Is it a 7% yield? Is it a 10% yield? That would probably be a much lower price for the stock. But keep in mind, you don't have to own every stock. And this is why, every investor has to figure out their own personal journey on what they want to own. Where do you want to weigh and put value on the potential of a business? You look at, value investors, like Warren Buffett, and he's putting a lot of value on their historical profitability and saying, hey, if I get a little bit of growth from here, that's great. And so, every investor is different in terms of how they want to approach this. I personally would look at this on a free cash flow yield basis when I'd want to buy it. And at that point, it'd probably be a much lower price, a significant discount from here. That said, maybe it works out. It just, in order to be a bull on it, I think you have to believe that they're going to reaccelerate their sales and get to 20 to 25% growth in the years ahead. Maybe they do that. That's just too hard for me at this point to size up. If this video has been helpful for you on Enphase, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.